John Fortt, I'm going to start with you because I know you've been watching these numbers closely. That services margin, 62.8%. Your thoughts?
I don't know what to think of that, Morgan, because I don't know how they calculate it. I mean, it sounds like it's pretty good. I mean, anything in the 60s sounds pretty good. But I think we need to understand better how Apple calculates that. I think the numbers that are overall important, the overall services revenue number looks good, up 19%. That's positive. And I think that guide overall is positive, even though it's really, the street was looking for $58.8 billion, and the top end of the guide is 59. You have to imagine Apple is being somewhat conservative here, at least. So, I mean, it doesn't sound like there's a huge amount of iPhone inventory probably floating around out there that they're worried about having to work down. That's what you would have been worried about if the guide had come in way below where Wall Street was hoping. But of course, we have to wait to hear more commentary on the call about exactly why they're guiding where they are and how optimistic they are. That's really interesting commentary that Josh Lipton got from Tim Cook. But overall, pretty decently positive based on the warning that we got earlier.
Dan, clearly they guided down at the start of the month, and the guidance for the current quarter was a little bit soft relative to expectations. Given that, are you surprised to see the shares jump after hours, or do you think expectations were just so low coming into this?
I think overall, initially from the numbers that we have, based on, as you said, the lower guidance that was given, it looks like a pretty good number. As John was saying earlier, that services number looks really good. I mean, I think the gross margin average on services is about 57%. So, we need a little more color on that. But, 55 to 65 billion was the range, and they came in at 59 on revs coming in the second quarter. So, just based on this initial information after the numbers were lowered down a couple of weeks ago, it looks like a pretty good number. Again, we want to get more color in terms of average selling prices and other things going on, but it looks like a pretty good number initially.
Ed Lee, I'm looking at some notes from you before we got these numbers today. Services, services, services. Looking at these results right now, looking at this release of a new metric, is Apple beginning to succeed in changing the narrative?
Yeah, I mean, I think so. I think taking a closer look at how this business is faring, it's the biggest services quarter ever. So they've been on track for turning it into a massive, $40 billion plus business going forward. I'd like to get a better breakdown as to what that comprises, right? How much of it's coming from Apple Music, how much from iCloud services, how much from the advertising business that flows through there, and then how much from the 30% tax that they're charging all the app developers have their stuff in there. So that will give us a better idea of where their growth is going to come from. They're spending a lot of money on original television production. When is that going to roll out? So yes, you want us to look there. Give us more information. I think that's what I want to hear more color on the call.
Ashley, there's always a lot of talk about whether they should be making an acquisition or not. Do you think that is realistic in the near future, a sizable one at least?
I mean, it's totally possible. I don't necessarily think that's where they're going. Like Ed mentioned, services is the discussion right now, and all signs are pointing towards a potential content service on TV. I mean, we saw them roll out AirPlay 2 to a variety of TV makers that are not Apple brands. So seeing how they do their own services, I think, is going to be much more indicative of maybe where the company goes in the future.
Ross, I'm going to put the same question to you. We had Dan Ives on earlier today on Squawk Alley. He suggested that maybe Apple should consider making a purchase around content, around a streaming service. I know you've made some suggestions of your own in terms of acquisitions. What do you think right now?
I think it's absolutely right. I mean, they haven't really made a real commitment to grow services beyond what they've done in video. It's a pretty weak effort in music. I really think that the best thing Apple could do, I mean, Bob Iger's on the board of Apple, and, it would be great to have them, let's say, buy 20% of Disney, have exclusive rights to all the Disney apps for free if you buy an iPhone for 3 months. They need to jumpstart services more, have more of an exclusivity to the services they provide. I mean, we're seeing issues like with WeChat taking over the operating system in China. You can't provide services if you're not controlling even your own operating system. So Apple needs to own this content somewhere, and they need to make some moves. If it's gaming, why don't you buy Activision? If it's streaming, get involved with Disney. If it's autonomous cars, you've got Tesla. But all these companies would be wonderful to add to the Apple ecosystem, even as strategic partners. It's time to reach out so they can really, double down on the services business.
Ross, based on this report we just got, I mean, you're a shareholder in Apple. Would you be a buyer?
Yeah, I would
more?
be. Apple did something very good this quarter, which is they lowered their expectations. They were very straightforward at the beginning of the year, which obviously we took our lumps, but they delivered what they said with the quarter. So I'm very happy about that I'm not sitting here hearing an even worse quarter, and I think a lot of investors are that. But when you look at Apple's valuation, it's just cheap. It's dirt cheap for such a great brand and company. I was in the Apple store yesterday. They still have the best products by such a large margin, and if God forbid they made the store actually sell some services, it might be helpful too. But we think Apple has a great future over the long term.
Mike, is that the main reason why it's trading up right now? The valuation and the stock pullback in recent months?
Yeah, I mean, obviously, all optimism got wrung out of the stock at some point. What's interesting is, in terms of where it has traded up to, is 157.90 something was where it was before the warning, right? Before that January 3rd warning, when it traded down to 142. And so now we've kind of gotten back above where it was when they warned. Now, the overall market is up huge since then. Apple has actually underperformed the bounce in the overall market, but it's now playing a little bit of catch up just because it could have been worse, I think, is the conclusion. I mean, we can talk about the long-term strategy, capital allocation, acquisitions, content, all the rest of it. Right now, Wall Street wants to just see that things are not falling apart any more than they already expected.
We're going to be back with so much more reaction to those Apple numbers. But in the meantime, Ed Lee, who is up on the platform here at the New York Stock Exchange, come on down here to the floor.
Do I get to sit at the grown-ups table finally? Great, awesome. Looking forward to it.
Finally, the upgrade.
All right, well, we're going to take a look at Apple shares right now. Those are up about 3% right now after hours on the heels of these results. Our all-star panel is going to return next with more insight and analysis on those numbers.
Also, that new consumer confidence number that hit today, Mike will go behind the data with his analysis on that. Welcome back. Apple, as we just broke out with numbers, our panel back again with us to discuss our own John Fortt, Ed Lee, CNBC contributor from the New York Times. Welcome to the set.
I made it to the desk, yes.
Ross Gerber, Apple shareholder at Gerber Kawasaki. Dan Morgan, Apple shareholder at Synovis. Ashley Carman from The Verge. Mike Santoli as well with us. Ross, I want to pick up with you. You are a positive long-term shareholder of the stock, but you actually think Tim Cook should be out. Is that right?
Yeah. You know, I think if you're going to be a services company, you need a services CEO, and you've got a product CEO. And you know, I was very disappointed at the store yesterday. You know, the store's beautiful and it's all products, and you can't go out and not break down, you know, iPhone sales and all these kind of things and say you're a services company, and you walk into the store and you can't find a services to buy anywhere or anything to learn about services, and you go into the Amazon store and it's filled with Amazon services and IoT. So the issue I have with Tim is I think he's done a wonderful job during his tenure keeping Apple where it needs to be within this range. But as far as doing anything that's going to propel Apple over the next decade, he hasn't done this. And he's not willing to make the difficult decisions to take risk. And I've heard things like he's making content decisions like with television, and it's similar to me like, you know, going into a farm and trying to pick the right crops. You know, it's like he has no background in the businesses that he wants to be in, and he really needs either to step aside or find more help or change management. But I think it's time for a change.
But he's done a hell of a lot more than keep it within a range, Ross, you have to say. And your response to that?
Look, I'm with Ross.
Ross.
I'm with Ross on look, services is going to be the growth story for Apple going forward. At least that's what they're telling us. In that way, Apple looks kind of like a hybrid company, but services is still like, what, 13% of the overall business. It's growing faster, certainly. It's a more predictable revenue stream. But, you know, he's got Eddie Q running the content side of the business. In all fairness, yes, maybe Apple hasn't always expressed the most cogent media strategy in terms of what it's doing. It seems to experiment with all different kinds of things. But whether that's a sort of a ding against Tim Cook himself, I think it's too early to say. There is growth there. We'd like to know more. I don't know that it's because Tim's in charge or not in charge. You brought up earlier about Bob Iger on the board. I mean, they're frenemies now, right? So if Apple's going to go into a streaming service, Disney's got one coming out of the pipe, and AT&T, Time Warner's got one as well. So there's a whole lot of... It's just getting more crowded. I think Apple's probably taking a wait-and-see approach. They've got all the money in the world. They could go out and buy a bunch of studios and to fill those coffers. But, you know, I don't think it's as simple as that's the only way they need to go.
I know what's going on with Apple in Hollywood, and it's a mess. I mean, they're not coming out with a streaming service, and it's a disaster, and they're probably just going to give it all away. So, you know, I think they need to accept reality that they're not good at making cars, they're not good at making TV shows, and they need help.
All the companies that make cars and TV shows are valued a lot less than Apple. Apple's not a services company any more than Disney is a princess dress company. So I don't know if you want somebody who's good at services and just that necessarily running Apple just because that's a growth area that they see. But I do think it is important for investors to figure out how much do you believe in Apple's not only ability to pull off services, but commitment to it. The first big example of Apple succeeding in this area was iTunes. And when Apple came out with iTunes, there was no iPod yet. They decided they were going to invest in a service, essentially, that was bigger than the hardware they had created before. People were giving Apple their credit cards and logging in so that they could buy from this store. Are they going to do that with this services strategy, getting Android users, other people to sign up to see something, to experience something? The services that they have now are not that.
Yeah, key point, John. And I would just note, I have a lot of Disney princesses dresses at my house. So I might just push back on that a little bit. But going back to this point, Ashley, I mean, you look at revenue from iPhone actually declined 15% from the prior year. Now, they're not breaking out the unit numbers for us anymore. But to even have a services business, you need to be having people using these phones, right? So what can we glean in terms of the fewer details that we do get here in terms of how the iPhone is playing out in the global marketplace?
Yeah, what's interesting is saying that Apple is more of a hardware company is true. Like, the reason people are not upgrading, at least in my perspective, is because the phones are well made. And I have a 6S. I'm one of those people who has not upgraded. And the reason I haven't upgraded is because it runs the same iOS as someone with an iPhone XR. I can have exactly the same phone as them. But that said, maybe with services, they should try to come up with some features that would make me want to upgrade. Right now, I'm not really seeing that.
Or how about a
Dan, where are
commercial?
you? Hold on, Dan. Where
Sorry.
are you in terms of valuation and sort of share price expectations from here?
Well, Fortt, in terms of, as you're mentioning before, I mean, the stock trades about 11, 12 times earnings. It's got a great valuation in terms of being extremely low. Obviously, they have a tremendous amount of cash on the balance sheet, $240 billion that they can spread out either with share repurchases or also in terms of dividends. I know we're talking a lot about the service side and everything. I still think Apple is a product-oriented company. I still think that's how they made their bread and butter, was always coming out with new products. And I think they're just in a lull right now, kind of like what we might have seen, you know, maybe 10, 15 years ago. And it's just kind of a question of time before they can come out with something that they can build upon this lost, growth that's occurred in terms of iPhone unit volume. So I think we're just in a transition period, but I think Apple has plenty of cash and trades at a very low valuation, which makes the risk low. So I think we're just going through this this kind of migration into something else we just haven't got to yet.
And quickly, John, we've got this conference call starting in just about 10 minutes or so. What are you looking for from that call?
More detail on exactly what they're seeing in services, how they're calculating that gross margin, what they expect it to fluctuate based on. Also more color on geographies, and to the extent that they're going to talk about inventory, that's important too. They don't seem to have a big inventory problem, but to what extent is Tim Cook really more confident about China? To what extent does he see the slowdown that China precipitated throughout emerging markets, the way he phrased it, I believe, in the letter on the warning? To what extent does he see that continuing or not?